So, in terms of, hey, let's continue to win, let's stick to our rules. So, how not to lose money? Make sure you're setting tight stop losses and just follow them. Understand that good setups, they just go.
Hey, what's up, guys? It's Mr. Fit to Flourish. Welcome to the Fit to Flourish podcast. Today, I wanted to be talking about, hey, how do we win trades? Everyone's always asking, hey, what's the setup? Hey, what's this? Hey, what's that? It's not always about the setup. You can do your ICT, ABC, 1, 2, 3. You can do all of these things, and you can still pretty much lose. Okay, so what do we do? What do we do to win? Well, we talked about things of why people lose. A lot of the time, people are losing because of these things here. Jumping in for revenge, jumping in after a good play with no signals, gambling on earnings, holding gains, hoping that it keeps going higher, having that stupid hopium. Well, let's take a look at some of the ways that we can actually win. Okay, how do we win? Okay, so this is how we win. All right, this is how we win. A lot of the time when you're looking for breakouts, some people use the vertical or the diagonal trend lines. What you want to do is horizontal trend lines trump these diagonal trend lines. So you want to look for a horizontal key level. Okay, if you're doing swings, you want to go at least 4 to 6 weeks out to give yourself enough time for that stock to move. Okay, and to allow your options not to waste. It's going to be more expensive, but fat moves against you are going to be less against you. Okay, you want to wait for bars to close before you get in on trades. And then when you swing or when you get into trade, you need confluence, okay? You need evidence that the trade is going to go in your favor. In your favor. All right, so what I wanted to do was I wanted to show an example of some trades that I took and some trades that I took today and trades that I took that were bad, trades that I took that were good. So here we go. I'm going to share this tab here real quickly. So this is QQQ, okay? This is QQQ. And just looking at today is September 10th, Tuesday on the 5-minute time frame. One of the trades that I took today was a early morning fade. And that early morning fade I took because there was so much confluence. There was, we were at a key level. And I was like, hey, this level is very hard to break. And we rejected pretty hard. We had a massive topside wick. And I entered before the bar closed. This is very risky because this could give you a false sense of confidence. I ended up winning this play. Okay. And then I ended up taking calls. Here. This bar, now that I look back, looks like a pretty non-trend bar, and it's a weak break above this horizontal line. Let me make this even bigger. So I entered on this bar here, this green bar. And now that I'm looking at it, it looks like a weak candle. We typically want to enter in after large candles, trend candles. But it needs to be a big break above the key level. And it was a weak break. And this ended up reversing pretty quickly. Okay. Luckily I exited. Usually I wait for a candle to close below my stop. And my stop is just one tick below my entry candle. Okay. So I enter up here on the next bar. So this bar closed. I enter up here on the next bar. But on this bar, after entry, we started pushing up pretty nicely. And all of a sudden, we had this huge red bar to the downside. And on that massive quick move, I exited. And the reason I exited is because if we were going to get that huge move down, there's probably some manipulation going to happen. Okay? There's probably going to be some manipulation. There's no reason for the bar to come back down like that. And then we ended up, I'm glad I got out, even though I didn't stick to my rule of, oh, let me get out when we close below. That was really manipulative, okay? And it went down too quick. So I'm glad, because look at this. If I waited until the bar closed, this next bar was a overexhausted, manipulative bar that went all the way down. Okay, so I didn't wait for a really big trend bar to break above my key level, the horizontal level. So I lost on that trade. I was pretty upset. I was like, you know what? Got a big gain earlier today on 0DTE puts. Try to get some calls here. Let me wait. Let me wait. So now we get more market structure. And now what I see is I see some pretty good support. And I say, listen, if we break this support here, this is another horizontal level. These horizontal levels have been paying dividends. Okay. If we get a horizontal level break, I'm entering. Okay. And we go back up to that high one more time. So we go back up to that key level, and we reject. We get a bearish engulfing bar, sell off to the downside, and then we broke below that key level, had a nice trend bar here, and the entry one tick below. So on the next bar here. Okay. And we had a nice continuation to our next ATR, average true range. Very nice continuation. Okay. So in terms of, hey, let's continue to win. Let's stick to our rules. So how not to lose money? Make sure you're setting tight stop losses and just follow them. Understand that good setups, they just go. Okay? You want to get in with 4 pieces of confluence, and 4 pieces of confluence only. Understand abundance, and do not FOMO. Okay. Using the golden pocket in terms of understanding Fibonacci, the Fibonacci retracement tool is really big. So I would recommend using that. And then make sure you're getting out with the gain. If you don't know, if you can't read the chart and be like, oh, well, it's definitely going to continue in this direction. If you can't read the chart and see that, and you're asking someone like, hey, should I hold or should I sell? You know you should sell at that point. You're up pretty big. You know you should sell. Take the profit. The market will always be there. You need to understand that. And if you don't understand that, you're always going to keep losing. You're always going to be like, oh, I'm going to leave it in. Your 300% gain, which could probably be $30,000, will turn into negative 10,000, and you're always going to be selling at a loss because you're always having hopium. Take what the market gives you. It's going to be there tomorrow. I promise. Understand the big picture, and that's what I mean. Understand the big picture. So small gains every day, that's fine. That's fine. Because one day, the play is just going to absolutely rip if you continue to take quality plays. F massive plays. Sometimes people are just only looking for massive plays, and they're not focused on quality setups. Because if you find a quality setup, it's probably going to be a massive play. But if you're looking for a massive play, it's probably not going to be a quality setup, because you're looking for just something random. You don't even know what that looks like. You need to practice. One of the things that I started to do was not trading before 10 a.m. And I mentioned that for beginners and for early retail traders, just because before 10 a.m. you get these false moves. 10 a.m. Eastern Standard Time is a reversal time. Okay. And then you probably don't want to be trading while at work unless you have a long period hiatus or a long period where you're not doing anything and you can look at the chart for more than 15, 20 minutes. And then do not hold earnings plays. When you're trading options and you're trading during earnings, there's a huge volatility spike, and that causes the option to be overpriced. And then overnight, during earnings, data goes to work and the IV goes to work, and you get what's called IV crush. Okay, overnight, that IV goes back down because the event already happened, and the option is almost worthless. So a lot of people lose a lot of money during earnings, and they don't understand why. It's because of the Greeks. It's because of implied volatility. Anyways, hopefully this helps somebody out there. I just wanted to kind of go over some of the things that you need to do in order to just win. win plays, man. Win plays. Stick to the rules. So I showed you some of mine. Hey, don't trade before 10 a.m. Wait for a good confirmation bar. Wait for breakouts. Wait for a nice trend bar to cross over a horizontal level. And then just understand that good plays, they just go. So when you saw in that play where I got out at my stop on a wick, man, the bar should never have came back that way if I'm getting calls. So good thing I got out. Okay. Anyways, it's Mr. Fit to Flourish. It's your boy. Keep winning. I'm out. Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance,